In today's video, I will test this 5-minute scalping strategy shared by The Secret Mindset to see if it actually works. I will backtest it 100 times with an account size set at $1,000 with 2-to-1 risk-reward ratio. The website I'm using for testing strategies is called Trader Edge and it's officially the best backtester out there. Thousands of new and professional traders are using Trader Edge to get an edge on their competition. You can save so much time by testing strategies with Trader Edge. All you need to do is to set up your initial account size and the profit and loss per trade. Trader Edge will give you all the information you need about the strategy, such as the win ratio, the profit and loss, the profit factor and more. You will also find some other useful features on their website, such as the position size calculator, which can be really handy for those who trade forex and commodities, the profit and loss calendar where you can track your trading performance and make some important notes, and the indicators and strategies menu. Here you can find and download some super accurate tools for TradingView and MT4 platforms, and they've all been proven to work. If you're not entirely sure how to backtest, no worries, you will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable trading strategy, no problem, you will also get a full course on how to build a profitable mechanical trading strategy which has $270 value. And if you sign up right now, they will throw in 4 pre-made high-quality strategies that have $100 value. So that's over $470 worth of bonuses, all for free, but only if you sign up right now. Trader Edge has a 7-day free trial, so there is literally no risk at all. So go ahead and check it out. I will leave a link in the description below. Okay, we're currently looking at the price of Apple on a 5-minute time frame, and this strategy consists of 2 indicators. But before we add them to the chart, let's switch the candlesticks from Japanese to Heikin Ashi. For the first indicator, we will select volume spread for VSA. And for the second indicator, let's search for RSI candles. Let's also add Heikin Ashi True Close indicator for more accurate backtesting results. Okay, now we need to access the RSI candles indicator settings and change all these parameters to 50. Alright, the strategy is complete, and now let's understand the trading rules. Alright, so here are the conditions for entering a long trade. First, the price action needs to be in an uptrend. This means that the RSI candles have to be green color. Second, we need to have a bullish breakout where the price breaks above the recent level of resistance. Third, the volume bar has to be colored in either red or yellow. This indicates an ultra high or high level of volume. And only when these conditions are met we can safely enter a long position. We're gonna place our entry at the blue circle. This is a real closing price. Our stop loss will be set slightly below our trigger candlestick. And we're gonna be targeting 2 times the risk. Exactly opposite rules apply for short positions. First, the price action must be in a downtrend. This means that the RSI candles have to be colored in red. Second, we need to have a bearish breakout where the price action breaks below the recent level of support. Third, the volume bar has to be colored in either yellow or red, and our trigger candlestick has to be bearish. And as soon as we have these conditions met, we can place a sell order. Our stop loss will be set slightly above our trigger candlestick. And just like with the long trades, we're going to be targeting 2 times the risk. If some of these rules are not met at the time when we have a breakout, then we simply skip the trade. For example, here we see the price is in an uptrend, the RSI candles are green color, we had a bullish breakout where the price crossed and closed above the recent level of resistance, but the volume in the market is average. So in this case, we do not wait for the next candlestick, we simply skip this signal. I would also avoid taking trades when we have massive candlesticks like this. 9 times out of 10, the price pulls back. Here's another great example for a long trade. We see the price action is in an uptrend, the RSI candles are green color. We also have a breakout. And the volume in the market is ultra high. And we see how well the strategy predicted the price movement. Okay, I hope the rules are clear. If you want to learn more about the strategy, check out the original video. Okay, now let's do our backtesting to find out if the strategy actually works. Okay, so after 100 trades, the results are really good. The win rate for this strategy is 56%, and we increased our account size by 269.67%. This win rate is really high for such a risk-reward ratio. The strategy is making consistent profits. We see the equity curve does not show any signs of serious drawdowns. The profit factor is 2.55, and we had 6 consecutive wins against 3 consecutive losses. So yeah, the strategy is working and you should definitely give it a try. However, if you find the rules a bit complicated, you can use the second version of this strategy, which I created myself. And for the second strategy, we're not going to be using the Heikin Ashi candlesticks. Also, let's get rid of the RSI candles. And now we're going to need to add 2 indicators to the chart. First indicator is called support and resistance with breaks. This one by Lux Algo. And the second indicator is called smoothed Heikin Ashi candles. Alright, now let's access the settings on this support and resistance indicator. And in the style section, let's remove all these breaks. The concept behind this strategy is not going to be any different from the first one. You're still going to be trading breakouts, but with this strategy you do not have to manually draw the support and resistance lines. Alright, so let's actually understand the trading rules. So here are the conditions for entering a long trade. First, the price action must break above the most recent level of resistance. The resistance level is colored in red. Second, the Heikin Ashi candles have to be green color, and that trigger candlestick is not touching them. It has to be closed above them. And the last condition is to have high or extra high volume in the market. This means that the bar has to be colored in either red or yellow. Our stop loss will be set slightly below the current candlestick, and our risk reward will stay the same. Another very important rule to understand: you do not take the trade if the price action makes gaps like this. These gaps usually result in the price action reversing really quickly. So yeah, avoid them at all cost. If any of these conditions are not met at the time when the price action makes a breakout, you simply do not take the trade. Here we see the candlestick broke above the most recent level of resistance for the first time. The Heikin Ashi candlesticks are green color, but the problem is the bullish candlestick that created a breakout is touching the Heikin Ashi candles. This means that the trade cannot be taken. Exactly opposite rules apply for short trades. First, the price action must break below the most recent level of support for the first time. The Heikin Ashi candles have to be red color, and the candlestick that created a breakout has to be fully closed below them. This means that the body nor the wick should be touching them. And the last condition is to have the high or ultra high volume in the market. Our stop loss will be set slightly above the current candlestick, and we're going to be targeting 2 times the risk. And again, avoid taking trades when the price makes gaps. As I said, this will result in the price reversing and hitting your stop loss. Always remember that only the first breakout matters. Any breakouts after it should not be considered as trade entries. Okay, I hope you have understood the rules for the strategy, and now let me show you the backtesting results. Alright, so we can see that the win rate for this strategy is a bit higher. It's 62%, and we increased our account size by 428.83%. The profit factor is 3.26, and we had 10 consecutive wins against 2 consecutive losses. Obviously, these results are not 100% guaranteed. You should definitely forward test this strategy with paper money to see its real win rate. Okay traders, that's going to be it for this video. Thanks for watching. By the way, check out this video right here. This is literally my #1 indicator strategy on the channel I have found so far.